Hello, we are live and we are covering the markets. Thank you very much for joining us. We'll try and begin with Gamestop. Gamestop is well, slightly down 0. Okay, up slightly, roughly 1%. Let's see what's going on here. There's some piece of news here today. It says price crossed above 50-day moving average today, the 11th of September, so February. Price rose through 50-day moving average at $51.61 on above average volume. Okay. Yes. Okay, this is still saying 112%. Okay, held by institutions, and obviously institutions are hedge funds. That is why the Wall Street bet fanatics. Oh, sorry if I call them fanatics. Wall Street bet bulls. Yes, that's what they are, bulls. That is what I saw, because they are definitely the ones. It says here 112% held by institutions. So yeah, but this is quite. This is not. This may be a bit stale. Let's see if we can get something much more recent. Yes. Oops. Okay. Okay, the short interest in 41% of 41.96, but that is still very high. That is still very high, but not as high as it was before, but it's still high. But it has also decreased by 65%. The current short is 21.4 million, and if this is anything to go by, it says 20 minutes delayed. So 21,410,000 and only 69,774,000 shares outstanding, and we have a short interest of 21.416 million. Okay, so that's roughly okay. So roughly, maybe 41.96%. So that is still very high. So anytime, any day, anybody that sees, apart from what is going on with the folks on Wall Street, WallStreetBets, if you see a short interest of this sort of figure, there's a very strong temptation to join in and buy, go long on the stock. So yeah, but this time around, it's these Wall Street bet longs. They want they're holding. I heard from this piece written here on Investopedia. This guy says it says they are in it. They're holding, buying to hold, and they're not just buying to make a profit. So. Alright, see, the Wall Street Bets squeeze play involves one premise: liking the stock and holding it indefinitely. The rationale: investor and speculator would normally buy stock to make a profit. WSB's approach is entirely different. The stockholders in that group will buy the stock as an admission ticket to bring down short sellers. Outside investors who do not understand WSB will criticize them as speculators seeking gains, and because that is not the case, the short sellers ought to get very worried. Okay. Okay, hedge fund Melville Capital Investment lost 53% last month. The media reported that the fund, which did not live up to its name of hedging, closed its Gamestop short position. If true, the firm could have realized the maximum loss. If it had waited a few more days, it would have covered the stock in the low 50 range. Robinhood's interference in what stocks investors could buy may have contributed to the stock's drop. Will the SEC look at the legality of such a move? The SEC will need to look at Robinhood's related solvency and commitments in enacting such a drastic move. The regulator will most likely look at the relationship between Citadel and Robinhood with greater scrutiny. So Citadel is the firm that Robinhood routes its bets, its transactions through, and by routing these transactions through Citadel, Citadel will pay Robinhood some amount of money. It will ultimately place the buy orders in such a way, that that probably for whatever benefit it is. But this Citadel is relevant because it is also of good use to all of us market participants, because it is because of Citadel and some of these other market makers. That's what they are, because of them, we are now able these days to place transactions for free. We're able to buy all the stocks for free. A few years ago, about more than 10 years ago, since more than 10 years ago, yes, these fees, even though sometimes they are small, they can just prevent you from, doing a lot, really. They are just they clip your wings, as a matter of fact. Especially when you're, no matter what, if you're trading with a lot of money or a small amount of money, the fees are something you have to consider. Especially when you're trying to buy. When you're selling, you've made huge gains. Maybe the fees may not matter. Of course, before this free trades regime came in, sometimes the fees may not have been a lot, but it varies. I know I personally got a deal from Options Express before they merged with Charles Schwab, and I got a flat fee of probably, I don't know if it's $10 or something like that, for any transaction, any penny stock transaction up to 1 billion shares. So I could, as far as it's below 1 billion shares, I could the fees flat about something £10 or $10 or something like that. So but still, for on other platforms it varied, and and on options as well. Options, that is also something. It was a big, may have been a big issue for a lot of market participants. Then and I can't even remember what it was, but the fact that the fees are no more there is really good, and indeed it has fueled and also created an opportunity for a lot of market participants to jump in. A lot of young folks have really jumped in, because if these market makers, Citadel and they alike, if they were not there, a lot of people may not really be trading stocks as much, because even Robinhood wouldn't have a setting point, So but so Citadel, what Citadel does is that certain number of shares, or rather, they take, I think, up to, I don't know if 1,000 shares, something like that, 1,000 shares, or something like that. If they route some of these transactions, if they get up to, how do I put it now? they pay about maybe something like $3, $4 per 1,000 shares or per 1,000 transactions from these platforms. So I understand Robinhood, gets the most from all these market makers, followed by Charles Schwab. Charles Schwab is the platform we're using, and the price also for options also varies as well. So but that's in a nutshell what I don't know if that's a nutshell. I've been going on and on about it. That's what Citadel does. That's what they're there for, and that is their relationship with Robinhood. And obviously they're not the only market makers out there. If they are not going to be participating or getting involved with Robinhood, indeed, I'm sure there are other market makers out there. So one other thing also that wasn't mentioned was that the market makers, you can see that if all the transactions are going through them, they can do a lot of things. They can do a lot of things with our orders, transactions. So they stand a good chance of doing things, strategizing themselves, repositioning themselves, taking advantage of a lot of things. So they make money, and they will definitely be making money. They can probably see what the direction is, where the orders are going through, what is going on. If they're seeing that there's a lot of buy, they themselves might place their own orders. I'm not saying that this is what they're doing, but you can imagine if you are, you've seen the direction of things. You can sense, and it comes to you ultimately to place these orders on the floor of on the platform of the exchanges. You probably take advantage of all of these things, and see what you're going to make out of it. So that so I'm not criticizing them or anything, because we are benefiting from all of these things. They are positioning all of these things, the way they are positioning themselves, the advantage they're taking, is ultimately how it benefits us. Because obviously they're not plucking money from trees. They're making money somehow. So you can call it market manipulation, but the market has been manipulated for centuries, for decades. Say since the 1900s, it's been going on and on and on. So there was a live stream I watched, Kendall Report, and the host of that channel was pointing to a book called Reminiscences of a Stock Trader. Just there's this guy, the character in that book. It's a real character, a real person. Jesse Livermore, I believe he cashed in up to 200 million or $100 million with the 1929 crash. So what they normally do is just like this WallStreetBets guys collaborated and did what they had to do. So yes, you can call it manipulation, but I think it is within the legal framework. Just as people might coalesce to buy the lottery and give themselves a better chance of winning the lottery. So it's probably within the rules. So, but there's a good chance also that some regulation might come in. Who knows? There's a good chance. So let's we've been talking. Let's try and see what's going on elsewhere. Let's refresh Gamestop and see what's going on. The last time we looked at it, it was up 4%. This is not exactly the best place we can look at it. Okay, this is more like it. It's right now down, up on its here and there. So from what we're gathering, a lot of those longs who are getting involved with GameStop, that is the ones on mostly from WallStreetBets, and indeed elsewhere, they are buying and holding. So a lot of them might be buying the stock if they actually know, buying it at these lower prices as well. Um, well, I guess it's to buy and hold and make it less available for short sellers. But if they buy it, well, they will have to sell it. So I don't see how that is really going to. Well, let's say just okay. Maybe it mustn't be that they are. Indeed, yes, that's I pointed out. They are not there to make money. So they're not there to make profits. They just want to get the shots. These shots. Probably the hedge funds who are shorting it to just leave the stock alone. They like the stock, according to what they're saying. They like the stock. They also like the company. And GameStop itself is you can see what we have here. GameStop is the upside and upside potential on your takeaway. GameStop may pivot its retail business by embracing the cloud infrastructure. Okay, gamers are embracing digital downloads over the physical purchase of game titles. So, hiring Matt Francis as the chief technology role should lift its prospects. The executive previously worked as an engineering leader at AWS, Amazon Web Services, Amazon Web Services, and they also hired Kelly Durkin. She will join as the senior vice president of customer care, and then Josh Kruger will join as VP of fulfillment. Okay, the short squeeze play continues for longer than bears would like. In the longer term, this retailer's fundamentals are showing potential upside. Its stock price will reflect that. Okay, so that's a bit of GameStop there. So let's look at AMC. So if you just joined us, subscribe, like, and share. Thank you very much for joining us. AMC is down. So let's have a look at the normal EV penny stocks. We cover for a lot of the viewers on this channel. Indeed, in anybody, any other person, we can always it's open to everybody. So let's look at ABML. ABML is down 3.72%. HYSR is down 14%. Okay, that is more than a correction. Something must have gone wrong. Okay, let's see. Okay. THCB. Toscana is down 2.77%. Sunwax is also down 2.74%. Fuel Energy is up 1.21%. OZSC, Uzub Energy is down 4.95%. Trading in between its trend lines. ASTI. Okay, Ascent Solar is down 4.9%. BSRC. Biosolar is down 8.57%. VTNR is down 1.79%. A lot of stocks we cover normally are down. But I'm looking up there, and I can see all the major indexes are up. Dow is up 0.14%. The Nasdaq is up 0.33%. S&P is up 0.16%. Let's look over here. Okay, thank you very much for joining us. Subscribe, like, and share. Okay. So let's go on and look at plot power. Plot power is up slightly at 0.87%. GVO is up 2.39%. Go EV is up 1.27%. Canoe Inc. Okay, sorry. Fusion Fuel Green PLC is down 1.18%. CCIV is a Churchill Capital, the SPAC that is involved with Lucid, the luxury electric car maker, is down 2.31%. Well, it's still early days, roughly 45 minutes into the session. QuantumScape 0.67%, down 0.47% now, trading in between its trend lines. Sorrento is down 0.07%. Romeo Power is up 0.69%. Let's see what's going on here. Okay, yes. Can you explain GME volume being so low? Is it possible for it to go up if volume increases like it did a few weeks ago? Can you explain GME volume? Yeah. Well, okay. Let's have a look at GME. Let's go back and let's look at this. Thank you very much for that question. It's down 1.96%. Let's there's a good chance it has something to do with the fact that it is yes, when it's normally when it's a sell-off going on, the volume tends to be impacted. Tends to be when there isn't very much buying, and then selling is also going on. That tends to be the case. So let's have a look. The volume is below average, 4.3 million. There isn't many people are not participating. Let's see what we can see here. Volume. Okay, this is because volume as measured using the unbalanced volume indicator is rising, therefore bullish. Okay, but not exactly what it is today right now. This is because volume is greater on up periods than on down periods, and implies that buyers are okay. So but right now we can see that volume is exactly up period. It's not we don't have an up period right now. We have a down period. Is that it? Exactly, we have a down period. So volume is normally greater on exactly, but volume is greater on up periods than on down periods. Absolutely. So it's a down period we're facing right now with GameStop. Hence this low volume. So in a small nutshell, that's what I can say about it. There might be other things. So. Let's see, they are saying here this is some piece of news. This came out today. Gamestop decided it could not seize on the Reddit fueled rally in its shares to sell hundreds of millions of dollars worth of stock because of regulatory restrictions, according to 3 people familiar with the US video game retailers' internal deliberations. Okay, see, everybody was wondering why it didn't take advantage of that. Which exactly Tesla did that during the summer. It's just waited for the stock to run up 700% in gains, I believe, before it just came in and raised I believe $1.5 billion. I'm not exact, or 5 billion or something like that. So we're expecting them to do the same. And many other companies, including the micro caps, we have seen Sun Hydrogen, they've done that as well. So many of them, will continue to do so. And we are like all of us market participants. We are like it's a symbiosis. We are all very important. Because we, by getting involved, especially with, it doesn't matter whether it's a penny stock or even a stock that's going to go bankrupt, by getting involved with them, their financial prospects improves, their ability to raise funds, which is a very, very key aspect of an organization, improves. And they go ahead and raise some finances, raise some capital, and get things going. So they say the company found itself at the epicenter of an unprecedented trading frenzy last month, as amateur investors organized on social media sites such as Reddit to bet against Wall Street. Okay, while many heavily shorted stocks, including AMC, to headphone maker koss, all scored big rallies. Koss, I believe there says here, koss is see, for example, the koss family and directors sold for $4 million in stock. So you see, unfortunately, GameStop couldn't take advantage of that. But the good thing is that all of these short guys, the longs, are on their side. They're on the side. They're like a politician running for office. That's what GameStop is like right now. So forget about what is going on. They will, when the time comes, I believe they will be able to do something. At some point, even their stock was trading at $20. So this is more than 100% on top of that $20 price it was trading at a few weeks ago. So they can still raise money now. See, they have only 69.74 million shares outstanding. They can always add a few millions and raise more capital. So if the restrictions go away, they will do something. So this company is it is here to stay. The people will keep them there. These guys will, even if it means they're going to go to the stores and buy games. They're obviously pivoting towards cloud infrastructure. People will support them. They've put them on the map. They are relevant now. I believe they will still succeed. The problem is that they were caught without their cover when the pandemic struck, and the pandemic favored those who had digital dispositions, and I believe GameStop already had it right from time, but they probably made more money from their hardware, physical stores, and all that stuff. Yeah, that's it. Also scored big rallies. GameStop, as it was nicknamed by many online, including Tesla CEO CEO Elon Musk became synonymous with the wave of trading speculation. GameStop's market value soared to $1.4 billion in January 11, to a peak of $37.7 billion on January 28. What is it now? $3.6 billion now. So it has lost 10% of that, less than 10%. Okay. GameStop could have raised hundreds of millions of dollars through a stock sale to pay down its debt pile, total that $260 million net of cash as of the end of October, and fund its transformation to digital gaming service as sales at its malls dwindled. Okay, yet GameStop never sold shares. The source, despite being egged on by many Wall Street pundits to do so, while it could still sell shares in the coming weeks. Yeah, exactly. The opportunity to raise hundreds of millions of dollars has now slipped as the rally in the shares have reversed. It now has a market value of $3.68 billion. Okay, GameStop explained the possibility of selling stock during the rally. The sources said the company had already registered with the SEC to sell $100 million worth of stock in December, an option it did not exercise, the source added. GameStop decided it was restricted under US regulatory financial regulations from selling shares because it was in possession of significant information about its finances that was not yet available to the public, the sources said. Okay. The SEC requires companies to have released such information when conducting stock sales. The information pertained to GameStop's physical fourth quarter, which ended at the end of January. By the time its shares took off in the second half of January, company executives had already compiled data and had a clear picture of what the quarter would look like, the source said. GameStop could have gone ahead with the stock sale by releasing preliminary earnings, but such a move carried out for the purpose of a stock sale came with significant logistical hurdles and regulatory risk that the company was not willing to accept. One of the sources added, the SEC had said it will scrutinize how many companies took advantage of the trading volatility to sell stock, and had asked that they provide more information to investors about the potential risk. Okay, so and they were 2.5 months into their quarter when all this stuff took place. It's so deep in the quarter that from a legal and corporate governance perspective, they would be obligated to pre-announce some high-level financial information for the quarter, and that can be prepared in just a week, said David Erickson, a finance lecturer at the University of Pennsylvania's Wharton School, who was previously co-head of global equity capital markets at Barclays. Okay, so that's some obviously certain certain pundits have been asking about that as well. Why did they not take advantage of that to do something, raise capital? And they were, as has been disclosed, they had some material information that they had not disclosed to the public, so they couldn't do that. It's not that they couldn't do that, but the implications, they probably didn't want to face all of that. Okay, so let's see. It's still down 1.27% right now. Okay, let's have a look at AMC. Okay, so thanks nature bats last. Thank you again. Thank you for joining us again this time around. And Alex, I hope I answered your question to some extent. Okay, so AMC Entertainment Holdings Inc. is down 3.62%. AMC is down, yeah, roughly it's about the same thing. And 18 million shares have traded. I mean, it's easier to have it to trade up to 18 million shares because it's by far cheaper than, about 10 times cheaper than what GameStop is, and it has a market cap of $2 billion, and shares outstanding is 339 million. So they took advantage of that rally to raise funds, but in their own case, theirs is by far much, well, it's quite similar, because they can always also pivot towards a cloud platform to join the streaming service, start delivering the movies and the drama and via the internet and online, and like, so they raised funds, and they are hoping that people will return to the theaters, and let's look at what their short interest is right now. Amc Entertainment. So currently it is indicating that it would take a third of a day to cover all of its short interest, and it has decreased by 16%. So that figures the number of shares sold short is 37.72 million shares, and here it is roughly 10%. So it's still very high, that's about $200 million that is on the sidelines that can go in there. Is it 200 million? Let's see. That's roughly $6 times 37. Yes, roughly 200 million. Yeah, exactly, I got it. 200 million and some fraction that can go into the stock. So yeah, it's still something, and it will definitely continue to attract market participants. That short interest is it has always been the case. I personally used to look out, when I'm screening, when I found out what stocks, what short interest was, what it meant, and that was more than 10 years ago. I never left it. Whatever I'm going to screen for stocks, it's a criteria, because it simply means money in the stock. The money is there. It's going to all the other parameters about the stock. None of them talks about money that is locked into the stock that will eventually be released into it. None of them is like that. So that's why it's important, amongst other things. So in a very short time, obviously, and maybe on a shallow fundamental basis, because because the short interest itself doesn't exactly have much bearing to the businesses or the company's ability to make money and all that stuff. So yeah. So before now, it was it had the short interest. This number of shares sold short were 44.6 million. Okay, so let's see what we can see here concerning games. AMC. Okay, there's a disclosure they filed yesterday. It says it's a form. Form SC13G/A by BlackRock Inc. Okay, let's see what's going on there. Maybe BlackRock is disposing of some assets that is pertaining to AMC. Okay, so voting power 5.805 million shares. So this positive power 5.92 million shares. So what's this about? Okay, okay, name of the issuer is AMC. Okay, okay, yes, I believe they are. Mhm. Okay, yes, this is probably a filing to indicate that they are disposing, I believe. Okay, so yeah, there's some more, and the Vanguard Group also filed one that was yesterday, the 10th of February. Okay, there isn't any fresh news concerning okay. Okay, yeah, so that this is the one we read, but it seems they also have something concerning AMC here. Okay, so they raised $1.2 billion through debt and equity deals after its shares rallied more than 70%. Okay, so yeah. So AMC appears to be correcting within a longer term bullish trend, no doubt about that. No doubt about that. Although its MACD is presently below the signal line, shares remain 23.9% above an upward sloping 200-day moving average. Okay, it is outperforming the S&P 500 index. Momentum for AMC strongly bearish, no doubt about that. Yeah. The 14-period slow stochastic oscillator is below 20, the level which many analysts call oversold. Okay. This indicator, this relative strength indicator, doesn't exactly. It's not over. Well, it's just maybe right on the mark of oversold and overbought. This means that investors have been actively selling shares, yeah, no doubt, and driving the price lower. Volume as measured using the unbalanced volume indicator is rising and therefore bullish. This is because volume is greater on up periods than on down periods, and implies that buyers are presently more active than sellers. Okay, that's a mixed sentiment, mixed opinion there. Okay, so let's have a look at koss. Koss, they also raised the directors sold $44 million worth of stock of late, so they are also down 4.12%. Okay, let's have a look and see what their short interest is. Subscribe, like, and share if you just joined us. Okay, koss. Yeah, the short interest increased by 38.19%. So the current short interest is 756,000. Let's look at the only 7.6. Okay, so this sort of stock will definitely be seeing a lot of let's see, you can see that, you can see it has a small float. You can see the spread between the ask and the bid. There's a huge spread. This spread is, we're talking about 27 cents. Is that it? Yes, 27 cents. No, yeah, 27 cents. What am I talking about? Yes, 27 cents, and that can make a lot of difference. That can make a lot of difference. And if you are in you can wait. You can, if you really want to get out, you can imagine if you bought this stock and suddenly you want to get out from it, but you don't want to lose the money. You could 27 cents can mean a lot to your funds. So you may be forced to remain there to see if it's going to move up, so that you can recoup at least as much as you put in, or something close to that. So you can see it is very important, and it usually occurs when you have a small float like this. But at the same time as well, there's a huge the upside is there as well. When it's going to rally, it will rally, and it will be, you can see what's going on here between since the end of January 2021 and today, the 11th. It has just traded narrowly, in a very narrow band, vertically mostly, and then of late just trying to move sideways a bit. So the small float, and also going by, and also given the short covering, it will send it rising seriously, and you can see that here. See, look at that. It went from this is the 26th, and that is the 27th. You can see that 26th is it was at $10.10, and then the 27th, it was at $58. Look at that. Not just because of the short squeeze that occurred, the fact that it's also has a short float, a small float, definitely will add to the pressure. The demand will grow, and the price will keep on rising to accommodate the demand for it. So that is what definitely, amongst other things, that left it that way. So yeah, it's fascinating. Yeah, so it's currently down. What's going on here? Let's see. It's currently down 3% at the moment. So okay, let's return and have a look at the penny energy, EV, battery, lithium stocks. Okay, American battery metals is down 3.99%. We've covered the American battery metals a lot, so we, of course, we have to keep covering it, because things are changing. So we can't, what we said before probably is not doesn't apply right now. So yeah, okay, we have to indicate we have a position in American battery metals. Yeah, 2.2 million shares, which is average. right about what it normally trades, is what the figure is, what it has traded so far. There's a good chance it will surpass its regular average. So let's if you just joined us, subscribe, like, and share. Subscribe, like, and share. Okay. Has a market cap of $1.8 billion, 479.89 million shares are outstanding. Okay. There isn't any fresh news as such for ABML. So let's look at HYSR, Sun Hydrogen. Sun Hydrogen is down 11.5%, trading above near all of its trend lines apart from the 200-day, but it's converging with the volume weighted average price at the moment. So it's currently at roughly 20 cents, presenting a buying opportunity, correcting, and let's have a look and see if there's any fresh news concerning Sun Hydrogen. If you just joined us, subscribe, like, and share. Thank you very much for joining us. Okay, we also have a position in Sun Hydrogen as a market cap of 610.7 million dollars. That is the market cap, and 2.845 billion shares are outstanding. Okay, today there's a fresh news, but it's a disclosure, a Form 8. Let's see what it says there. Okay, it's pursuant to Section 13 or 15D of the Securities and Exchange Act of 1934. Okay, I think it's used to report an event. On February 11th, Sun Hydrogen filed a prospectus supplement to its registration statement on from S3 registration pursuant to 424 as amended to register the sale of 132 million shares of the company's common stock issuable from time to time upon exercise of previously issued warrants. The warrants were issued on the 29th of December 2020, has an exercise price of roughly 8 cents per share, and are exercisable until December 29, 2020. So I think there are more shares. I'm not very sure what that but definitely more shares. 130 million, yes, 132 million shares to this 2.845 billion, and they are raising okay, they're registering. Okay, issuable from time to time upon previously issued warrants. All right, so this it's to match the warrants that are already issued. Opinion delivered to the company by Skinesia Ross Ference LLP in connection with the sale of up to 132 million shares of the company's common stock issuable upon exercise of outstanding warrants is being filed herewith in accordance with the requirements of item 601B5 of Regulation SK under the Securities Act of 1933. Okay, so this is the disclosure of the company, of the law firm. Okay, so this is this document. This form 8 points to the form 3 as well. So it's one of the okay, so they're saying they had received the original copies of the following articles of incorporation. The company has amended bylaws. The company has amended the warrants, registration statements on Form S3, prospectus supplement filed with the Commission today, the 11th of February, written consent of the Board of Directors of the company approving the issuance of the warrants, and have they examined the original copies certified or otherwise identified to our satisfaction of such records of the company and such agreements, certificates, and receipts of public officials and all that stuff. Yeah, that's the latest, but I think that may have spooked market participants, but because they are increasing, it's a dilution that will occur. So market participants may just run scared and sell off a bit and come back later on. So it's a good chance for people to load up more on sun hydrogen. It's now affordable by 11.64% at the moment. So if you want to get involved, obviously sun hydrogen, you may have heard, amongst other things. Yes, on the 9th, it says here, it's provides updates on the newly provides updates and shares newly taken images of its Gen 1 demonstration unit. So that is the Gen 1 is as it concerns its hydrogen solar powered hydrogen production technology. So the Gen 1 obviously is a precursor to the Gen 2. The Gen 2 is I think described down here a bit. Say Sun Hydrogen's Gen 2 program is one that the company believes is more economical from a technological and commercial viability standpoint by gaining and leveraging insights from the Gen 1 program. Gen 2 technology is well positioned to attain 3 times the solar to hydrogen efficiency and represents a potential tipping point for market changing hydrogen production. Okay, so yeah, obviously you know that they are trying to they're optimizing the science of water electrolysis at the nano level, and their low cost nanoparticles mimic photosynthesis to efficiently use sunlight to separate hydrogen from water, ultimately producing environmentally friendly renewable hydrogen. Using our low-cost method to produce renewable hydrogen, they intend to enable the world of distributed hydrogen production for renewable electricity and fuel cell vehicles. Okay, to learn more, you can go to their site and see more of that. So can we have a look at the images? Yes we are. We're looking at this has to be image 2 attachments. Okay, we don't know if this is the image as it concerns the Gen 1 or Gen 2. Okay, yeah. So yeah, sun hydrogen is definitely developing still at the development stage, and probably making money, but definitely not as much. Okay, so the volume, the last 10 days have seen significant volume in sun hydrogen, with average daily volume above the average for the last year. And today's volume, that's today, the 11th of February 2021, is no exception, with 41.4 million shares having been traded already. The unbalanced volume indicator is bearish. The stop of the indicator is negative, and suggests that buyers lack the interest to buy. Yes. So that's what's going on with sun hydrogen. So all of these negatives are also positives, because present you a buying opportunity, and indeed, some certain market participants might feel it should be cheaper than it is now, and they may want it to get a lot cheaper than it is now before the joining. So, but the longer it stays with low interest, low volume, and the lower the prices goes, the likelihood that at some point it's going to pop a little bit as well. Okay, so let's look at OZSC, OZOP Energy. OZOP is down 2.3, roughly 3%. Let's have a look. Before we do that, just 1 minute. Let me sort something out, if you don't mind. Okay, sorry, I'm back again. If you just joined us, thank you very much. Subscribe, like, and share. So let's have a look at, yes, we're looking at OZSC Energy, OZSC. OZSC is still down 2.6 or 2.5%. Okay, there's some business summary concerning OZSC. So OZSC, because of its dilution, there isn't much on this chart. See if we can zoom in. I think we're getting there. Okay, we're at 33 cents, but we can't see anything yet. Well, we don't need to bother about that. We can always use the live one. Okay, there we are. Okay, we can always try and see. Try it 1st of January 2021 and have a look and see what happened. Exactly, this is more like it. This is more like it. So this is what has happened so far with OZSC. This is a daily chart. Okay, subscribe, like, and share. Thank you very much for joining us. So let's extend it a bit further. We can see this is the 10-day trend line, 20-day, 50-day, 200-day, the long-term 200-day. So let's include a few more months so that will bunch up the chart a bit more. Let's go back as far back as October. Okay, yeah. So I think by the time by this October, the dilution that they implemented had come into effect. Yes, before that time it had come into effect, but thereafter started to increase. Okay, so it appears to be strongly bullish. It appears to be in a strongly. It appears to be in a strongly bullish trend. Okay. Its 200-day moving average is upward sloping, and the MACD histogram is above zero. It is outperforming the S&P 500, and the momentum is waning. You can see this price rate of change has dipped. It's dipped over. Today's volume is on track to be lighter than usual, with 54.07 million shares having traded so far. The unbalanced volume indicator shows that longer term accumulation has given way to near term selling pressure. It's always the case. It's a cycle, and so this is what's going on. It's down 3%, and yes, of late it ran up some huge gains. So it yesterday, yesterday the 10th, that was when it lost some. Okay, and it wasn't only that. At the 9th, it lost some value from, it dropped from this all-time of this recent high, yeah, on the 9th, and has continued to. Is that a correction? Yes, definitely in a correction mode at the moment. So did it say it's correcting? Okay, it says it's strongly bearish, not strongly bullish. Okay. Yeah, even though it may be strongly bullish, but it has corrected from this high on the 8th of February 2021. So okay, if you just joined us, subscribe, like, and share. Okay, we're looking at the Nasdaq futures. For some reason, it's trading at a lower figure than the Nasdaq cash itself. Let me show you the Nasdaq cash. This is it. It's trading at 14,035. Okay, so let's have a look at RE. Okay, global power is global battery metals is down 16.40%. Yeah, this is also one stock that run up a huge gain in just one session, over 100% in one session. That must have been, I think, on the 5th, is it? On the, yes, on the 8th. So that's where it reached. It reached this high of $1.52. So yes, roughly 100% from what it closed at on the 5th. So Let's try and see if we can get some volume. Yes, today's volume is on track to be lighter than usual, with 583,851 shares having traded so far. The unbalanced volume indicator is bullish. The stop of the indicator is positive and suggests that buyers are presently more active than sellers. Probably as at the time that opinion was printed, or when that analysis concerning the volume was printed. Okay, so okay, trading just slightly above all of its trend lines apart from the volume weighted average price. So it's currently down 15.79%. That's global battery metals. Okay, let's look at Toscan. Toscan is microvast. It's the SPAC that is involved with microvast. So it's down 3.57%. Let's look at what's going on here concerning it. Okay, today's volume is on track to be lighter than usual, with 668,349 shares having traded so far. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. Okay. So on a daily chart, it's trading below its 10-day trend line, so slightly getting cheaper. And of late, it has been depreciating. It's been losing value from the from the 5th of February. It has, or rather, since the 8th of February, has continued to decline. Yeah. So let's have a look at Sunworks. Sunworks is down 6.23. Let's find out if it's the same here. So yes, right about the same figure. So trading below all of its trend lines. If you just joined us, subscribe, like, and share, and thank you very much for doing so. $338.7 million. So given all of the gains it has had, it's still not up to a $500 million. So at some point it was, yeah, sometime in October it was trading at $2.99. We'll probably have to have a call over and see when we started looking at this stock. And to date, filed a disclosure with the SEC There's a Form 8 as well, Form Effects on works. Okay, today there's, yes, this is disclosure. Form 8 normally discloses an event or something like that. So let's see this Form 424B5. Okay. They are saying they have entered a sale agreement with Roth Capital Partners and Roth Capital Partners, the sale agent relating to the issuance and sale of common stock offered by this prospectus. We may offer and sell shares of our company of our common stock under this prospectus, having an aggregate offering of $50 million from time to time through or to Roth Capital. Okay. Okay, let's have a look at the use of proceeds. The amount of proceeds from this offering will depend upon the number of shares our common stock sold and the market price at which they are sold. There can be no assurance that we will be able to sell any stocks under or fully utilize the sale agreement with Roth Capital. We intend to use that proceeds from this offering for general corporate purposes, including without any limitation, sales and marketing activities, product development, making acquisition of assets, business, companies or securities, capital expenditure, repayment of indebtedness, and for working capital needs. We may temporarily invest the net proceeds in short-term interest-bearing instruments or otherwise investment-grade securities. We have not determined the amount of net proceeds to be used specifically for such purpose. As a result, management will retain broad discretion over the allocation of the net proceeds. Dilution will occur if you invest in our common stock. Okay, dilution will occur. Is that what we're seeing? 5.5% decline. Good chance. That is the case. But market participants have already pumped the stock up, and over the past few months, it's been rising and rising and rising. So this is what you get. Dilution usually occurs. So if it's a problem, for some people at the moment, it's not really a problem. But I believe, dilution and they really don't. I would probably expect them to offer bonuses or split stocks, offer bonuses, I think, and then use it to raise stocks, and that's a reward to the market participants who were there already. It's all the same as well, but why don't you offer a bonus to the market participants? But I can imagine how that can be deemed as whatever it is. I don't think it should be deemed as anything, because you'll be offering this bonus to market participants thereafter. It's an after effect after implementation. Yes, okay. I can imagine that they might get a criticism that they may be rewarding market participants that pushed up the stock, and that some might even say that they probably really don't deserve the valuation they are getting. So by rewarding the market participants, they are somehow rewarding maybe, or rather encouraging risky investments and all that stuff. So, but this is just an opinion. Doesn't mean that is what the case is. But I mean, I'm just thinking, why wouldn't they just do that? Offer a bonus to existing shareholders, and it's equally the same thing. It's a dilution as well, but they have a purpose. They want to raise more money, but it can always be done, so just in case, if you are going to run your own company and you want to issue more stock, you can always do that as well. So I think the other question is, would the current shareholders do they have the resources to buy if they offered bonuses, and bonuses or whatever it is, would they have the money to buy them? Yeah, they mustn't have the money. There are so many other avenues they can trade them, and go on, and they do not really have to have the money. Yeah. So okay, so it says if you invest in our common stock, your ownership interest will be diluted to the extent of the difference between the public offering price per share and the as adjusted net tangible book value per share after this offering. Our net tangible book value of our common stock on September 30, 2020 was approximately $207,000, or approximately 0.1 cent per share of our common stock, based on 16.62 million shares outstanding. Is that what they have? Okay, 16.629 million shares outstanding, correct. Okay, subscribe, like, and share if you just joined us. We're digesting the disclosure by Sunworks. We calculate net tangible book value per share by dividing the net tangible book value, which is tangible assets less liabilities, by the number of outstanding shares of our common stock. After giving effect to the sale of our common stock pursuant to this prospectus in the aggregate sum of $50 million at an assumed offering price of $20.92 per share, the last reported sale of our common stock on NASDAQ on February 8, 2021, and after deducting commissions and estimated aggregate offering expenses payable by us, our net tangible book value as of September 30th would have been $48.7 million, or $2.56 per share of common stock. This represents the immediate increase in the net tangible book value of $2.57 per share to our existing shareholders, and an immediate dilution in net tangible book value of $18.36 per share to new investors. The following table illustrates this per share dilution. Okay, assumed offering price per share is 1 cent. Increase in net tangible book value after this offering is $2.57. Adjusted net tangible book value per share after this offering is $2.56. Dilution per share to new investors in this offering is $18.36. Okay, so that's what's going on with Sunworks. Okay, today's volume is on track to be heavier than usual, with 2.78 million shares having traded so far. The unbalanced volume indicator shows that longer term accumulation has given way to near term selling pressure. Okay, what do we have here? Okay, it's still down 6.19%. So let's have a look at fosl energy. Or rather, fosl is the one we were looking at some time ago, and let's see. It was we covered it for some time before it reached this current price. So yesterday it reached a 52-week high. It says price triggered at 52-week high event of $29.25 at 9:30 a.m. Eastern time. So market cap of 8.6 billion. You can see how it has been steadily rising. It's on a trend mode, and it has the only time it breached this support was of late was sometime in probably the first trading day of this year, 4th of January. That was when it broke through that resistance, that 10 day moving average resistance. It appears to be in a strong bullish trend. The 200-day moving average is upward sloping and the MACD histogram is above zero. Today's volume is on track to be lighter than usual, with 6.7 million shares having traded so far. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. Okay, there's some news here. I will have a look at it first. Okay, this it has 322.412 million shares. And then let's have a look and see whether we can get the current figure, if there's something we can rely on. Okay, so the short interest has decreased by 33% and stands at 27.13 million shares. So the buying pressure is definitely affecting the short interest. So still has 27 million shares outstanding and sold short. Let's find out. So relative to this, we are talking about 27. So it's also 27 against 32. So we are looking at something close to 8% or thereabouts. Yes, that's still very handy, So if you multiply that 27 million by 8, if you multiply that by 8, you have what will that give you in terms of buyback? That will give you roughly 240 million or thereabout. So that is still something, $240 million going back into the stock. So it's not and that has 34% of the shares are held by institutions. It's likely to be short sellers. It's very likely to be. You can see. Yeah, there's a good chance that of that figure. Yes, some of them are held by people who are selling it short. So let's see. When we started covering the stock, sometime in November, probably. We'll have a look and see when we started covering the stock, but yeah, they themselves may have also taken advantage of this to raise more capital. more shares, sell, issue more shares. So let's go on and look at, we've looked at what's up, we've looked at, let's look at ASTI. Ascent Solar Technologies is down 7.48%. ASTI it's down 7.35%. Okay, reached a 52-week high yesterday, the 10th. A price triggered at a new 52-week high event of 9 cents at 9:30 a.m. on the 10th of February 2020, but closed has since dropped down to 68 cents, roughly 7 cents. We have to indicate that we have a position in Ascent Solar Technologies. So it's currently down 7.48% now, trading below all of its trend lines. The last 10 days have seen significant volume in ASTI, with average trading volume above the average for the last year. Today, the 11th of February's volume is no exception, with 144.011 million shares having traded already. The unbalanced volume indicator is bullish, the slope of the indicator is positive, and suggests that buyers are presently more active than sellers. Okay, so let's look at Biosolar. After that, we try and look at other stocks on the move. Biosolar is down 8.96%. Okay, down 9% now, trading in between its short-term, in between its trend lines. Market cap of $73.7 million, 526.286 million shares outstanding. Today's volume is in line with the norm for this point in the day, with 5.56 million shares having already traded so far. The unbalanced volume indicator is bullish, the slope of the indicator is positive, and suggests that buyers are presently more active than sellers. Okay, so let's see if we can find some other stocks on the move.